Blackbird Aotearoa recently closed $75 million on its second dedicated New Zealand fund. Here to talk about the initiative is Principal Phoebe Harrop and partner Samantha Wong. You've just closed $75 million on your second dedicated New Zealand fund. Tell us about that experience.
Well, it was great. I mean, we only raised our first fund really a little under 2 years ago. So it was a really positive response to coming back to market. We started raising this second New Zealand fund as part of a bigger $1 billion fundraise with our Australian early stage fund and follow-on fund, which is an opportunity fund, just before Christmas. And very quickly got a really good level of interest and soft commitments in, and then in February, March started the formal sort of closing of a lot of those investors. So it all came together actually very quickly, and we're really pleased with being back for another fund so soon after our first.
And what lessons did you learn from that first fund? Did you change anything this time around?
Yeah, good question. I think with our first fund, our bread and butter at Blackbird is really, really early stage. So pre-seed to seed, pre-revenue, sometimes pre-product companies, and we do still really love doing that. But I think one thing we did learn in our first fund is that there are still really good opportunities in the Kiwi market around the Series A, so companies that might have a bit of revenue or a product out there. And so we're open-minded to investing in those companies as well.
And last time we spoke to you in June, you were seeking $80 million for this fund. You closed around 75. Does that mean you fell short?
No, we still have the funds open, and they'll probably be open till early next year. So we were targeting 70 to 80 mil. That's a big lift from our previous target, which was a 50 mil fund. We raised it to 60 mil fund due to excess interest, and so it's still a big uplift on our strategy for the first fund. And we're still have probably one more close left in this fundraise before we'll call it. But I think what's been really pleasing about this second fund is the level of interest we've had from institutional investors. So for some, it's the first time they've invested in early stage VC in New Zealand, or the first time they've invested in a very long time. So and some examples of that are an Australian superannuation fund called Host Plus, which is one of the biggest superannuation funds in Australia. They invested in our second New Zealand fund. Also Sendana Capital, which is a Silicon Valley-based fund of funds program. They've also invested for the second time in our New Zealand fund. And then, of course, ACC, who haven't committed to a New Zealand venture fund in many, many years, I think over a decade. And so they have committed to this early stage New Zealand fund. And I think what that speaks to essentially is the quality of the opportunity that it is now emerging, all quite obvious in New Zealand, and the back of the Fund One's performance. Institutional investors are getting around that for the second fund.
It might be worth mentioning as well that although the fund is currently $75 million, we also have that more than $700 million Australian follow-on fund available to Kiwi companies. And so what we're doing really is specializing so that early stage fund is really targeted at those pre-seed, seed and Series A rounds. And then for later stage companies, we can draw on the follow-on fund to make first or follow-on investments in Kiwi founders.
And alongside Care Patron, you mentioned 3 unnamed investments. What can you tell us about them?
Well, it's actually 4 since we have finalised. Because we haven't announced them, we can't name the companies themselves. But to give you a flavour, they are all sort of pre-seed to seed stage companies. So as I mentioned, that's very much our strategy, and ranging in everything from deep tech and the energy transition through to cybersecurity and B2B SaaS. So that's straight down the line for us at Blackbird. We're a generalist tech investor, and roughly 70% of our investments is usually software, and the other 30% in deep tech. And we're incredibly open-minded within the church of deep tech as to what we'll be excited by next. I think the main thing that we really look for is ambition and wanting to build a huge global business, and that's what all of these businesses have in common.
And can you give me a rough idea of the investment size into those companies?
So our first checks are typically anything from a couple of $100,000 to a couple of million dollars. But as Phoebe mentioned, we do have this larger opportunity fund from which we can lead with checks of tens of millions of dollars.
Are you able to tell me how much you've invested so far with them?
We have invested in 18 companies total from this new $1 billion fund. And that's spread across the early stage Australia and the early stage New Zealand and the follow-on fund.
And how many companies overall are you looking to invest with this new fund?
Yeah, so with this new early stage fund, we're thinking it'll be a portfolio of sort of 15 to 20 companies. That's pretty similar to what we do in Australia and also what we did with our first fund.
Oh, very exciting. And you mentioned ACC before. They were sort of an early investor. They signed on quite early.
Yes.
Can you tell us
Yep.
about some of the more recent investors?
Some of the other ones that have come on board are Host Plus, as I mentioned. So Host Plus is one of the largest superannuation funds in Australia. It is a very big venture investor, but it had never invested in New Zealand before. It got a little bit of a sneak peek into what was happening via Kiwi investments into our follow-on fund, and decided to make a very sizable commitment to our current fund. Some others, so obviously Elevate has come back for supporting us for our second fund, which is great. I think we're the only Elevate fund that's received a second check from them, which is awesome. Sendana Capital, as I mentioned as well, which is a very big Silicon Valley fund of funds program. But then also, we've had support locally from Hobson Wealth and their clients, which has been awesome. Family offices like K1W1 and Hoku. And we love that because, at the heart of Blackbird is a founder community or a tech startup community. And we're so excited to see sort of high net worth and maybe traditional wealth in New Zealand supporting all the amazing ideas that are going to really drive prosperity in the future for Aotearoa.
And there's been some commentary about sort of tech valuations and money being sort of hard to come by in the US. What are you noticing in New Zealand? Is it a similar situation or is it different?
I would say it's really, it depends on the company. So availability of capital at an ecosystem level is good in New Zealand as it is in the US. There have been bigger and bigger venture funds raised in the last couple of years, including in 2022. And so there is plenty of capital available. I think what we're seeing is that that capital is becoming more discerning. So the best companies will continue to raise really successful rounds. We're seeing really strong interest from US venture funds in some of our portfolio companies. And so there's no shortage of, fair, good valuations from US investors and also from local investors. I think there's perhaps a bit of a sorting out of some companies that maybe would have found it easier to raise 12 months ago and they're now finding it a little more difficult. I think that's just the natural way that the cycle is moving. So from our perspective, there is a good amount of capital available for follow-on rounds into our companies.
And what headwinds are there for raising money at the moment?
Well, I think, just to kind of carry on from what Phoebe said, like, the capital markets, are really boxed by stages. So I think here in Aotearoa, New Zealand, there's still a lot of early stage funding available. So if you're trying to raise a $2 million round, a $5 million round, that is still, I think, a very achievable thing, and certainly much more achievable than it was 3 or even 4 years ago. Notwithstanding, it's not as easy as it probably was 12 months ago. I think it becomes a little bit more challenging as you are starting to raise sort of series, B and above. As there are a bunch of global investors who have sort of pulled back a little bit from the market or pulled back from late stage investing, and or have a stronger preference to invest in companies that are serving global markets from the beginning. And that's sort of a big bias of ours at Blackbird, is to see companies who are selling to the world from the very beginning, because then the world's investors are also potential investors for your company. But overall, I think it's a bit of doom and gloom sometimes in Twitter and on Twitter and so on. But the reality on the ground is, in my experience, not as dire as that. Having said that, as we move through the next 12 months or so, there may be some headwinds, as overall, consumption appetite, decreases, interest rates go up. That may have an effect, which makes us all the more delighted to have this $1 billion pool of capital to support the very best companies.